99.9% they want the farm to be risk-free. If the farmers already knows that he's 99.9% risk-free, then why will he give 5 to 7% premium? So let it be practical. I'm not saying that insurance is not required, but I think it's the most difficult aspect to get into, especially in our country with shrimp farming. Accept it and then move on.
Correct. So we have to devise tools which are very appropriate. So I will be.
Yeah, I think we can reserve our discussion.
Yeah, reserve our discussion.
End of the
correct.
So, good afternoon, everyone. Honorable Director, sir, and Speaker Suchitra, and all participants. A very good afternoon and a very good morning to our Speaker Suchitra. It's now around 5:30, and she woke up early and she is with us. And welcome, Suchitra. The United Nations, as you all know, that they have estimated around $4 trillion a year are needed through by 2030 to achieve the Sustainable Development Goals, and which is compared to $1.5 trillion that are being invested now. And in this fisheries sector also, fisheries and aquaculture sector, there also we need considerable amount of finance is needed, and to protect and grow the blue economy and to meet the ocean-related self-sustainable development goals. Probably Suchitra is well aware about this, as this is which she represents this one. And many of the countries that they depend mostly on blue economy are developing countries, and mostly by small-scale fisheries with limited finances. And as per the estimate of FAO, the small-scale fisheries sector provides significant employment and livelihood support for more than 116 million people in developing countries. Fishers' access to financial and insurance services is often minimal or only available at very stringent conditions, and interest rates are that they cannot afford. So realizing this, FAO has published guidelines for blue financing to promote blue growth economy. And I'm happy to inform you all that today's speaker, Suchitra Upare, who is also an alumnus of CIFE, has been a part of such initiatives of FAO. So to understand blue financing, who can be the better person than Suchitra? And hence this lecture has been arranged. And I welcome one of you once more and request Dr. N.P. Sahu, the component leader of pedagogy in NAHEP, and HOD to give welcome address. Sir, please.
Thank you, Dr. Rupam. Good afternoon, everybody. I think it's a good gathering from CIFE. It is a amalgamation of the old veterans from CIFE, old and new, amalgamation in one platforms. And we feel honored to have our own students, Suchitra, after a gap of 25 years. And it's good to know that he's leading in this blue finance, blue economy. I think it's a new area, upcoming area. And before this, I want to tell you that this NAHEP, National Higher Educational Policy, this is a mega project at CIFE funded by World Bank. We are arranging the guest lecture series. Under this head or under this banner, we are inviting freely the eminent speakers across the world. And today we don't have any hesitation to invite our own students, Suchitra, to this platform. And I think that for economic, Dr. Rupam, we are having any other lectures on economy, or is it past lecture?
Yeah, I think so. It's first.
It is a fast lecture, economics. So we are trying our best to cover, giving a good coverage to all the subjects. And I think the economics is a fast, rather it is a blue finance, a blue economy. And we found that Suchitra is the best person for this lecture. And this shows that our old Dr. Manoj Sharma is there. I could see Javi Tiwari and Rajiv Jha also is there. So it's an attraction that the speaker attractions or CIFE attractions, but many old students are there. And I have also received requests from many colleges to join this program in a group. So that shows itself that what is the importance of these lectures. I hope that uh, before this lecture there was some discussion by Dr. Manoj Sharma, and I think it will continue up these lectures. There will be good interactions with this topic, and I with this without much uh, knowledge on this subject, particularly on me, there is a blue finance and a blue economy. I invite Suchitra to take the platforms and uh, discuss about this blue finance and blue economy. Thank you, Dr. Suchitra. And now this platform is yours.
Yeah, but before sisters, I would like to say a few words about Suchitra because many of our students are there who might not know her personally. So it's always good that our students know what our alumni are doing outside the institute. So Suchitra Upare, as I said, she is an alumnus of CIFE and she completed her master's in fisheries science come in 1996 from CIFE, and she is currently engaged as consultant in food and agriculture organizations FAO and works as a coordinator for CAFI SSF network, that is the global network for capacity building to increase access of small scale fisheries to financial services. She started her career in as a fisheries extension service at the College of Fisheries, Ratnagiri, India, and was engaged with the Fisheries Extension Center to conduct training programs for fisher groups, women, and rural youth. She also conducted a study on livelihood of coastal women involved in post-harvest and marketing activities and prepared report for microfinance and entrepreneurship development for coastal community of Maharashtra in India. She was also an adjunct faculty and was teaching cooperative management and microfinance subjects, postgraduate courses in Wellington School of Management under Mumbai University. And Ms. Suchitra has implemented a microfinance program in coastal provinces of Odisha state, and as a project lead, she advised microfinance institutions as to how they could increase their fisheries portfolio within the area of operation. She served as a part of the team to set up the first 15 rural financial service branches in Tamil Nadu that provides suite of financial services, microfinance, insurance, and other savings. She has worked with multilateral agencies like GIZ India under the Rural Financial Institution Program to launch a financial capability toolkit for financial service providers. She has also been associated with consulting firms like TechnoServe India Limited to prepare agriculture and fisheries district plans under Atma project. Suchitra has also been a consultant with a public sector company, WAPCO's Ports and Harbour Division, as a social action and gender equity expert to assess societal needs of coastal communities. And in recent years, as an FAO consultant, worked as a team members under the FAO's Blue Growth Initiative and now engaged in establishment of CAFE SSF network. So, and also she's a part-time faculty in one of the community colleges in New York. So Suchitra, it's really nice to know about your work and about your, activities. And we are extremely happy that you are with us. Now it's over to you. The floor is yours.
Thank you, Rupam. Thank you for giving such a illustrious introduction. I'm overwhelmed. And thank you, Dr. Sahu, for the welcome note. So I would now begin with the lecture. Can we just have the PPT? If
You can see now? It's visible?
No, I'm not. I'm not able to.
Others can see. Nuzaiba, you can see the screen?
I can see.
Yes,
It is
we all
visible.
can
It is
see.
visible. Yes, sir, we can see it.
Suchitra,
Okay.
you change your layout. You go to the speaker view or some other, then you will see.
Yeah, I can.
Try to change your layout of the screen.
Yes, but Rupam, I can.
Suchitra, it will be better if you can present.
Okay.
Shall I stop share then?
Share the screen, it will be very easy for you.
So I'll stop it.
Just a minute.
Try, Suchitra, try from your side. Go to the option, share the screen.
I have been able to see it, but I'm not able to get the slides in a bigger mode.
No, but that's what I'm telling you. You try to share your screen.
Bigger mode means
from your laptop. From your laptop or your desktop, whatever it is.
Okay.
So you have your presentation with you?
I do.
So then just go to the option, share the screen.
Okay.
Shall I stop then? Shall I stop?
Yes. Upam, let her try. Take
Okay.
It will be very easy for all of us.
Yeah.
All right.
Try Suchitra that way. You can see the option of share screen.
Yes, I can.
Now then press it. Then you will see different options. Your own desktop screen you will take and go minus it and then start presentation.
Technological challenges.
Yes.
No, it's not a technological challenge. It's the timing because they wake you up at 4:30.
No. आप घर के ही है. Don't worry. आप हमारे घर के हैं. Don't worry.
Take your own time.
No, I think Rupam, you run it now. I have managed to focus it. Yeah, I've got the full screen now. It would be great.
Okay.
It's good if you can share it.
Yeah.
Yeah, please. Okay. So thank you very much. And I'm sorry for this initial glitch that happened. So welcome everyone for this lecture on blue finance to support small scale fisheries. As we are seeing that what we've been talking about, the previous slide. Yeah. So there's been a lot of talk about this blue finance, blue growth initiatives and blue economy. So I would just like to kind of start with what exactly this is and why it is being talked about so much. Of course, Rupam did cover a little bit about it in his talk. So basically, this is a World Bank initiative, which is there that supports the implementation of the Sustainable Development Goal, particularly the Sustainable Development Goal, goal number 14. And it is fully aligned with the World Bank's twin goals of ending extreme poverty and increasing the income and welfare of the poor in a sustainable manner. Next slide, please. Yeah, so as you can see, it supports the integrated and sustainable economic development. And the goal number 14, which is there, is if you see in the goal number 14A, which talks about conserving and conserve and sustainably use the oceans, seas, marine resources for sustainable development. And if you see the goal number 14B, that's exactly where providing access for small-scale artisanal fisheries, which also includes small-scale fisheries, to marine resources and the markets. So that's precisely what we are focusing on in terms of ensuring that how small-scale fishers and artisanal fishers can be included in the mainstream markets, because so far there has, and it's been many years, over almost more than 5 decades, 5 to 6 decades, there has been a lot of marginalization, and it still remains the same in spite of so many mainstream, tools and which are existing. And if you compare small-scale fisheries with traditional or small-holding agriculture, we find that it has still been marginalized, although small-holding agriculture has managed to get mainstream financial supports or different kind of supports which is there. So this is where, if you can move to the next slide, please. We're talking about, as you can see, what is the relevance of this blue finance and blue growth economy through the blue initiatives that we're trying to do. Based on the data that we have and the recent reports that have also been come up, it says that employment in the fisheries and aquaculture sector has grown faster than even the world's population. And it has been faster than the employment in the traditional agriculture systems. As a lot of us who are from the fisheries sector, we know that the fish landing sites or the harbors and the associated processing facilities which are there, the wholesaling and retailing of fish, which provides significant employment and economic benefits to the countries and to the coastal communities also. Whoever and most of us who have visited the landing sites, and we see so many, value chain actors over there. It's a hub of employment. And when we see over there, we see right from full-time people employed to part-time, as well as occasional or seasonal actors who are involved over there. And looking at the data, if you see, globally, the market value of marine and coastal resources, as you can see, that supports these industry is estimated at $3 trillion per year. And that is about approximately 5% of the global GDP. That's the value this industry supports. And besides that, more than 90% of the livelihood that is directly dependent on fisheries and aquaculture is occurring in the developing nations. And in this particularly, the small-scale fisheries operations involves a major share. Again, as I was talking about, that's precisely what the relevance of blue growth economy is all about. And we're trying to work towards providing access to small-scale fisheries and the marine resources and the markets that it involves. Next slide, please. So here, just to give an idea about the share of global employment which the fisheries and aquaculture sector is there. As you can see, that about 60 million estimated population is involved in the primary sector, of which, as you can see, 85% is consisting the contribution of employment is from Asia market itself, and the remaining 9% is Africa. Rest is 4% America, and Europe and Oceania countries just contribute 1% of the employment to the sector. So primarily, it's the Asia and the Africa which has the major constitution of congregation of employment in the fisheries sector. And that too, if you see the small-scale fisheries operation, it's more than 90%. So that's one of the reasons why we are promoting and working towards inclusion of the small-scale fisheries sector into the mainstream markets. Now moving on to the next slide, please. Okay, so why are we talking about so much about the blue finance to small-scale fisheries? As you can see, as you all may be aware, that traditionally financial investments in the fisheries and aquaculture sector has been limited. Besides that, the production and profitability too has been historically unpredictable. And therefore, it has presented a very risky business model for the financial sectors. Now, going into the reasons, if we see as to why access to small-scale fisheries to finance and insurance services is constrained. It's also because there's limited knowledge of fishing operations and aquaculture technology and techniques, besides the vulnerability of the communities and the, of course, unique business characteristics of the small-scale fisheries. That's what is a challenge which and a constraint which the financial service providers have always felt. There's also, of course, limited knowledge of high demand of credit and insurance by fishers as well as the fish farmers. There's low profitability of fishing vessel credit and insurance programs also. Besides that, if you see that there's a high transaction cost and there's high monitoring cost when it comes to provision of credit and insurance, particularly for the small scale fisheries. As well as if you see the kind of premium, the premium amounts also, which go into these kinds of programs are small. So these kinds of factors do not really attract the financial service providers to give credit or insurance facilities, particularly for the small scale fisheries. If you see in the bigger aquaculture fisheries development projects, there is, service providers are keen to kind of service them. In my experience, I have found that even if it's a big investor, a insurer or a financer is ready to kind of, provide the kind of customized services. But when it comes to small scale fisheries, it's these factors because of which they do not want to invest into this business. One of the other reasons that we have felt in terms of why access to small scale fisheries, credit and insurance, as well as microfinance access is limited is because the fishers as well as the fish farmers, their geographical area of operation is remote. So access to this area is also limited. And that involves a lot of transaction costs, especially for the financial service providers. And then, as they say, the institutional linkages, because a small scale holder, he or she himself would never bother to, go up to the financer. At the same time, the financer doesn't want to come to them because of the transaction cost, the geographical remoteness area. So what is lacking is a weak institutional structure over here, or a well-functioning, fisher cooperatives that may be existing, or the associations or federations, which basically can act as, the credit and insurance agencies to provide the right kind of services to the clusters of the small-scale fisheries areas. So these are some of the main factors which are there, and because of which the consequences that one faces, especially the small-scale fishers that they face, is the exploitative credit conditions and the interest rates which are there. As you all are aware that there are always money lenders or loan sharks which are readily available in and around the areas, or the community always has to depend on them. Besides that, if you see the data also in the Asian sector, less than 5% of fishing vessels are insured. And these are some of the reasons why it happens. Also, the cycle of debt and poverty still continues amongst the fishing communities, because it's not just, they are looking not just for their life cycle. When it comes to the life cycle needs, their requirement is not just only for the productive loans, but it's also for the consumption loans, and to insulate that. And we often find that what happens is when they are asking for credit or credit services, often they are asking for the business productive loans, but the real fact is maybe it's the loans are being used for consumption purposes. So the challenges are multiple for this community. Also, if you see, there is, the previous slide itself. There's also, and because of so much of continuous, there's so much of pressure on the resources, particularly the coastal resources. And there is continued depletion of coastal resources, which is happening because there are no other avenues for this community other than ensuring that they harness the resources from the oceans and the areas where they're staying. At the same time, there is low investments, innovation and development, which is happening for the SSF communities and the sector itself. So these are the basic consequences because of lack of investments coming into the sector. And the other reason also is, of course, from the community side, because there is low awareness levels amongst the insurance, amongst the SSF for ensuring that, to insulate their life cycle needs, they also need to have an insurance. They need to take insurance to mitigate their life cycle needs. So that awareness is also low. At the same time, there is a lack or low interest in financial literacy amongst a lot of fishers. So these are the broad areas and the rationale based on various research that has been done, as well as the information. And as we have also, it's common knowledge, which has come from various stakeholders. So these are the broad areas why there is limited access to finance in the sector. And that's precisely where now we want to move into to see that how blue finance to small scale fisheries can be brought about. And it is with this aim that the Blue Finance Guidance Note series that has been released recently by the FAO last year to provide the governments, private and public sector stakeholders with the information, resources, and the concrete pathways for obtaining finance to support blue growth transitions at local, national, regional, and global scales. So as you see, one of the major, there are a couple of financial instruments that have been introduced, but in today's talk, I'm going to talk more on microfinance for small scale fisheries, insurance, and aquaculture insurance for the small scale producers. Can we move to the next slide, please? Okay, so just focusing on what is actually microfinance. So most of us, we feel that microfinance or it's just about financing, but that's not the case. Microfinance is basically banking the unbanked and providing them with the services right from credit, savings, remittance, payment services, and to all these millions of low income groups which are not serviced by the regular banks at all. Or the banks or the financial services providers are wary of providing these kinds of services. And most of these services are collateral free. So because small scale fishers or any low income group person, people are not able to provide sufficient collateral. So there's a risk, but at the same time, how this risk is mitigated through various dynamics and group dynamics and how the processes are. That's what we're going to see further. Can we move to the next slide, please? Okay. So just coming back to why microfinance is so important, as I was talking about, which I just mentioned, that fishers have a continuous ongoing requirement, basically, for credits. And this is an instrument of oppression, also an exploitation when it's borrowed from the loan sharks or the middlemen. Then as we move, certainly because if the middlemen do provide credit, they also take control over the fishers' rights. And over here, the fishers' rights is all their fishing harvest or the fish catch that they do at the end of the day or at the end of the season. So this is where the debt and the poverty debt trap and the poverty issues arise. And then, of course, providing credit supply at the high interest rates, which I was talking about, creates dependency and further pushes the fishers and the families towards poverty. Can we move to the next slide? Okay, so I just wanted to give a overview of how is the microfinance sector overall, not just in Asia, but across the globe. So why we are promoting so much of microfinance is, as you can see, microfinance institutions worldwide are serviced by 140 million, and the borrowers with a loan portfolio of about $124 billion that you can see. So that's the potential of the microfinance services, and it's still growing even today, as this is a 2018 data. Also, next, if you see, India is one of the India is leading in the microfinance sector with 47 million borrowers and a loan outstanding of about 15 billion USD. At the same, further, as we see, Asia is also, then it's not just India, but there are a couple of more Asian countries also, which are following India. So Vietnam is second, which is followed again by Bangladesh. And then we have Mexico and Peru also, which contribute to this sector. In terms of the markets between the Asia and the Latin America, if from what we have observed, it is that in Asian markets, it's the penetration of microfinance is more into the rural sectors, whereas in Latin America, it's more in the urban and the urban areas. That's where. So they haven't penetrated much into the rural markets. So this is exactly where the Asian markets, the need for microfinance, and particularly that which microfinance can serve the small scale fisheries, is very important over here. Coming to the data for the region wise, as you can see, Southern Asia dominates the global microfinance markets with a borrower base of 85.6 million people accessing the services, and it still continues to grow. Also, just to give an idea about Latin America and Caribbean, it stands at 48.3 billion USD. Sub-Saharan region, which is an evolving market, and they say perhaps it's going to kind of increase and exceed the Latin American and Caribbean markets also. So if you see sub-Saharan African countries, I think it's a congregation of around 48 to 49 countries, and they are at 10.3 billion today. And Europe contributes to just about 5.7 billion. Now, looking into further, just to look into, sorry. So looking into the microfinance.
Without any provocation of the East.
Sorry.
Only what you just mentioned, I saw this fellow.
So looking into the microfinance markets, this is the overall microfinance situation, but when it comes down to the fisheries related aspects. So if you see the microfinance portfolio region-wise does not exceed beyond 5 to 10%. Although we would say that the data is extremely disaggregated over here, and it all depends on how the organizations are reporting. So perhaps it could be a little bit more over here, but in the current situation, because of disaggregated data, the overall estimates that fisheries and aquaculture sector may be getting about 5 to 10%. And the data on how much of small scale fisheries is getting serviced by the microfinance institutions is still not very clear, but this is the rough estimate which is there for the small scale fisheries sector. Yeah, can we move to the next slide, please? Okay. You'll have to click this because okay. All right. So over here, if you see, we have tried to categorize as to for the financial service providers in general, that you'll have to click 2 more because they're on the other side also. Just keep clicking, Rupam. Yeah. So as you see, the requirements for and the potential credit needs for small scale fishers and fisher households, if you see across, is not just for consumption loans that we have categorized over here, but it is also for the other various activities, right from marine fisheries sector, the coastal aquaculture, the aquaculture sector in general, which is the inland and the up mountain ones, as well as the post-harvest value-added products, which is there, and the marketing support, which is required. So these are the array of credit needs that we have categorized to for ensuring just to see the value in the terms of what kind of requirements are there for the small scale fisheries sector, and how different kinds of products can be developed by the financial service providers to cater to the needs. Because the reasoning and the logic most of the time, which has been of the financial service providers other than the banks, because small scale fishers are mainly catered by the microfinance institutions or
Ramagaru.
NGOs which act as microfinance institutions which are there. They do not have the capacity in terms of products for the provide the loans to them just the way it would be for any other normal business activity, and that does not really work for the fishery sector or the small scale fishers communities or the sector as such. So one needs to customize. At the same time, the institution also needs to understand the technological part as well as the business characteristics part to develop the products and the suite of products for this community. Can we move to the next slide? Yeah. So we're going to see what are the various, who are the various stakeholders who are here in the financial providing the service space, which are there, and what kind of channels do we have to cater to their needs. Next slide, please. Okay, so here we have the microfinance institutions. Okay. Sorry about that. Okay. So if you can see over here, the stakeholders which are involved in the microfinance services are right from the banks, the government institutions, the microfinance institutions which are there, rating agencies, of course, because they are, unless if it's they do not, they do play a big role, because if the institution is not kind of doing the right services, the rating agencies certainly can kind of stop the microfinance institution services, or at least give the report to the regulators about it. Then we have the training organizations, which also support the microfinance institutions, which are there. Individuals and experts who can kind of ensure that how the microfinance services can be improved and effectively be provided to the SSF sector. NGOs also are one of the important stakeholders who do facilitate the services, although they may not be directly involved in provision of the finances, but how they kind of facilitate the services to the end clients. So can we move to the next slide? Okay, so over here, just to give you an idea about the various channels in microfinance and how it functions. So if you see, two broad main players over here are there. One is certainly the banks, and the other is the insurance companies. And how they channelize it is through the NGOs, microfinance institutions, and the cooperatives. And cooperatives are certainly one of the important links to reach to the end fish farmer or the fisher who is there. The next around that is through these institutions, how is the delivery model that happens to these to each of the individuals or to the association. So it is through the different models which we're going to talk about further. One is the SHGs, the JLGs, and the Grameen model. So SHG stands for Self-Help Group, which a lot of people in India are aware about. The JLG is the Joint Liability Group, which is in existence. And as we just saw in one of the slides, India is one of the biggest markets in microfinance. So we have a lot of microfinance institutions which are operating in our country, almost in every nook and corner. And then the Grameen model, which is the Bangladesh model, which is there, which people did hear about it after Dr. Mohammad Yunus got the Nobel Prize. But it's not being implemented in India, but we have a slight modification of the Grameen model, which does operate in our country. And then, of course, the end user is the fishers and the small scale producers, which there. Next slide, please. Okay. So looking into the demand supply side, if we can, as we're seeing that the actors again involved over here. So we see from the demand side, it's just the end user. And the supply side, if you can see the number of players who are involved over here, right from government institutions, MFIs that we've been talking about, wholesale financiers, international financial institutions, which also have donor funds. So from the supply side, there is so much of abundance, and yet we find that the demand side still continues. So that there's certainly a gap somewhere from the supply side, and that's precisely the reason why we are trying to promote so much of blue finance, and through various financial instruments that can cater to the demand side. The other multifunction roles which the value chain actors play are also there. Also the development NGOs, which do facilitate in some way or the other to provide the financial services in terms of, say, the training or kind of ensuring the financial literacy programs reach to the end user. And then, of course, the enabling environment, which is created by the local and regional governments, which play a major role in provision of these services, as well as the government agencies and the regulators, which is the central banks or RBI or the other regulatory bodies, or even the insurance regulatory bodies, which do create an enabling environment to provide these services to the small-scale fisheries sector. Can we move to the next slide, please? Yeah. So we're going to see over here the existing models for provision of these services. Next slide, please. So I would like to start with the self-help group bank linkage. This is certainly very prominent in India. And as I was saying, India is one of the evolved markets in this. And in one of the recent webinars, I was hearing in the Asia Pacific Rural Credit Association webinars, which is an association for the financial institutions. And I heard that now even countries like Sri Lanka are, thinking of adopting, or they've already started thinking to bring in the self-help group bank linkage models in their countries. So how this model operates basically is, it's a self-help group is a group of informal association or a group of about 20 to 25 members who voluntarily come together to get economic benefits on the basis of mutually helping each other. So basically, this is a solidarity group, and which does take a joint responsibility of each other in terms of ensuring that instead of providing, they act as a group guarantee, and that by itself is a collateral mechanism for the financial institutions. The benefits of this concept is basically that there is easy savings access, because an individual, it takes, there's a lot of transaction cost as well as the time factor that is involved in an individual reaching to a financial branch or an agency office. Whereas over here, being a group dynamic, it's easier to come together and ensure that the savings and the credit facilities can be obtained. At the same time, they are able to also focus on their micro or small enterprises, which they are focusing on. This concept is also more of a social activity concept, but at the same time, it has a financial linkage aspect also to it. And it's a comfort, it's not just comfort, but it's a win-win situation, both for the financial agencies as well as the people who would like to access financial services. Also, it is being a group guarantee mechanism. The time involved for a financial service provider to ensure that the client is serviced instead of just catering to one client. At one point, they are catering to more than 20 clients together. So it also, the transaction time cost and transaction cost is also saved by the financial institutions. Can we move to the next slide? Yeah. So as I was talking about, it's a group method, and it's one of the most common ways of microlending, which is being practiced. And there is also a good experience and in reaching to the wider client base, particularly the poor clients which are there. And certainly our small-scale fisheries clients do a lot of them are below poverty line, or certainly do need a lot of credit facilities. Then the way this model operates, as some of you all may be aware, that SHG bank linkage is one of the ways. And then through this linkage, basically, it's a time period of around 6 months where each of the individual members contributes a savings amount to the group. And this, it's the savings is a bank account is opened in a particular financial institution. And then based on a 6 months period, there is a grading that happens of each of the groups. And the grading happens on several aspects, right? From has the group met on time? Has there been a consistent, savings habit, which each of the individual members and the group has done? Have they been able to maintain the financial records which are there? Which is expected to, and it's a part of the grading process. At the same time, what is the kind of potential activities or existing activities that the group is currently engaged or involved in? So based on this kinds of aspects, the self-help group is graded. And then after 6 months tenure, once the financial service provider feels that, okay, this group can go into a particular A, B, C kind of grading, whatever that they have. Maybe it's A or A plus. So they are provided the loans, which is there, and then it's a cumulative amount, and then the group can divide equally or whichever way based on the requirements of each of the individual members for their income generating activities. So this is one of the good models, as I was saying, in terms of reaching for a wider base of population, which is there. And several groups together, several self-help groups together can also get federated, and, they can create a cooperative or a federation. That is also one way where, a larger population or groups can come, and there can be access to financial services, which also works pretty well for the financial service providers as well as the end clients, because then they don't need to they don't need to handle each of the clients individually, but they can deal with the federation or the cooperatives together. Next slide, please. Okay, next slide. Yeah. So, as you see, I was talking about the group methodology over here, and how the characteristics of the self-help groups are. Basically, these are homogeneous groups. Either it could be a women group or it could be a men group. And if it's whichever group is, they are having common, income generating activities. The kind of decision making is also processed as participatory over here. And then, of course, in terms of repayments, also, there is always a group pressure that is there. So it's difficult, or it's hard that, one person may not, if one person does not repay, then maybe other group members kind of take over and pay on their behalf at some point, because they do not want to get a lower grade in terms of the grading of the self-help groups. So this kind of mechanism has worked very well, especially when lending is happening for the vulnerable section, whether it's small-scale fisheries or any other people who are involved in income generating activities. It has been a successful model in India, and it has evolved even further now. So next slide, please. So just to give a gist of what I was talking about, how this model works, as you all can see, the SHG bank linkage model. First, there is the bank, and there's a direct, the end user is the self-help group people who generate savings over a 6 months period. But in between them is the non-profit organization or any agency which is monitoring the group. It is also training the groups in terms of how to maintain the records, how the discipline can be maintained, how are they facilitating their activities. So there is an agency, because the financial service provider, it's difficult for them to move just to one group because it's a time and cost matter. So in this model, if you see, this is how the facilitation happens. And the branches access credibility of self-help groups and monitor the repayment processes through the NGOs or the facilitating agency which is there. These agencies also ensure that there is a group formation, and they ensure that there's a proper financial linkages that happens of the SHGs. And as you can see, although the lending is directly between the banks and the groups, it does not go, this works on a commission basis. The agency which is there, or an NGO, which it works on a commission mode. And then the group has to directly repay to the bank and not to the NGO. So this is how the SHG bank linkage model works. The next model that we are talking about is the microfinance institutions, which is done by a lot of institutions which are existing in our country. And these microfinance institutions, as you can see, based on this model, the bank lends it to these institutions, and these institutions further sublend it to these self-help groups or to the joint liability groups or the individuals. In my experience, from what I have seen when I was working in India, most of the microfinance institutions prefer to give it to a joint liability group or the individuals, because it's much more faster for them in terms of provision and also repayments, if you see. Over here, what is a microfinance institution basically over here? So as you can see, it's an agency between the banks and the end user clients. And they do charge a particular cost over and above the interest rates, which the bank interest rates are. And most of these microfinance institutions adopt the joint liability model, which is like a smaller group of say 5 to 7 members. It can also involve any even number is what a joint liability group generally adopts. So it can be, some of the groups are even 3-member group, but ideally they prefer to have 5 to 7-member group in terms of outreach. And next slide, please. So the goal over here, again, is it's the same common goal for a microfinance institution also, that poverty elevation, empowerment, and provision of financial services, which is required. Also, the kind of organizations which can be microfinance institutions can be NGOs also. Cooperatives also can act as microfinance institutions for their end clients. Also mutual benefit associations which are there. The lending criteria of these microfinance institutions is slightly different from the self-help group models over here, because they do have a assessment criteria in terms, because their turnaround time from the time the loan is origination happens to from the time the sourcing happens to the lending, maximum timeline is sometimes a lot of institutions promises about 7 days time. Some of them now, with so much of digital tools being adopted in the financial sector, so some of them, for them, the turnaround time is also 3 days. So how they go about doing this is they look at the income and the assets part of each of the clients. Although it's a group dynamic, but they look at the income and asset part. They also look at the housing index. These institutions have a housing index criteria internally. So they do a house visit also for the clients. Then they also look at what is the kind of income generating activities, and they try to group people with similar kind of income generating activities. So this kind of model works very well even for the small scale fisheries sector, because either most of the SSF is generally a group dynamic activity. And nowadays also there's a credit score check which happens. So the credit score also looks at, has there been a multiple borrowing habit by the client, so on and so forth. And in my experience, I've also seen that if a client has borrowed from more than, say, 3 institutions, so that the client does not qualify. So these are some of the very stringent criteria these microfinance institutions have adopted. And sorry. So these are the lending criteria for these institutions. And the methodology, as I said, is again the group dynamics, except the difference between the self-help group and a joint liability group is the number is small. And it's very effective for entrepreneurs as well as, you know, people whose requirement is very fast in terms of credit. And especially for the small scale fisheries where the credit needs is almost on a daily basis or almost every weekly basis. So this kind of joint liability model works excellent for them. The operational area also, unlike the regular financial institutions or the banks, the microfinance institutions operational area can be either local or regional. And they also move to the extent of, you know, 25-kilometer radius from where their branch offices are. So it works very well because of the remoteness and the geographical remoteness, which a lot of SSF faces. So the outreach can be better. And nowadays also there is mobile transfer payments also, which are happening. And especially with COVID times, there has been a lot of transition and a lot of digital technology is also being used for transfer of money by a lot of microfinance institutions, particularly in India. And it is also being adopted, I've seen based on reports and discussions with some members in Philippines also that we've come across. Next slide, please. Okay, so moving on from the joint liability model to the Grameen model, which I was talking about. So Grameen model, joint liability model is basically a modified version of the Grameen model. And over here, again, it's a 5-member peer group organization, which is there. But the difference in Grameen model is that the membership is open, of course, to all peoples from the same village and who belong to the same economic resource backgrounds, particularly. But in terms of lending, when it happens, what happens is in the Grameen model, initially only first 2 members in a group. Say if it's a group of say 6 people, only the first 2 members can receive the loans. And that's a challenge if you see where people who are, you know, coming from the similar economic resource backgrounds and who all need the loans together, and the requirements is almost on a daily basis. So such kind of a model can present a challenge. And then after the first 2 members have received the loan and subsequently when they have successfully repaid, the next 2 members get. So the waiting period is extremely long, and not many people would like to go for it. At least it has not been adopted well in our country so far. But it has worked very well in Bangladesh, and they are also implementing this model in various other countries, particularly in Africa also we've seen. Also, the other thing is the repayment period is within 1 week's time, which again can be a pressing and can pressurize the small scale fisheries sector sometimes, particularly in the aquaculture sector, where we are talking about bullet repayments, which is like, when I say bullet repayments, it's at the end of the harvesting cycle, which can happen in terms of sometimes even 4 to 5 months, at least in the shrimp culture that we've seen, or other short crops, which we would like to take in the aquaculture sector. So this kind of model does not work that well in our especially in the fisheries sector, and particularly in the Asian context, where we have seen not many countries have adopted it other than Bangladesh. But it depends on the countries and the regulatory environment of those particular countries, how they want to go about to deliver various financial instruments. The last model is that we're going to talk about is the village banking model over here. Again, it's a community-based credit and savings association, which is there, but it involves even a larger group, sometimes more than even 50 members. What I have seen in Africa, particularly in Zambia, where there was a group gathering of almost more than 60 people. And just to get them together in terms of having a unanimous opinion as to would they want to take the services from the microfinance institution or not, it took almost more than half the day. And such kind of the kind of time that is lost would be a challenge for a lot of SSF sectors who cannot afford to give that kind of time. But it depends again from country to country, and the village banking model has so far been very successful in the African regions. So over here, if you see, the initial loan capital also comes from the external sources. When we say external sources, it could either be an investor, it could be an institution, it could be a donor fund, which is there. And then the members operate their services, they establish their own bylaws, they distribute and collect the loan payments also. And of course, it does not have a collateral which is required. So it's a group dynamic which is involved. And each individual is able to take the loan based on their requirements at that particular point of time. So this is the flexibility which village banking model has over the Grameen model, that you do not need to wait for the next first people who have availed the loan. So this is the difference between the Grameen and the village banking model that we can see across regions. Can we move to the next slide? Okay, so how much time we have, Rupam? I just want to check.
You can have your own time. It's almost maybe
thanks.
Around 10-15 minutes.
Oh, 10-15 minutes? Okay. All right. So looking at the, So looking at the success stories, I'll quickly move on to the success stories in, I'll touch upon 2 success stories in Africa as well as Asia. So here we have, okay. Next slide, please. Yeah. So I would like to talk about one of the case studies that we have seen. This project was funded by the USAID, and it was implemented in Ghana, and it was particularly Women Association, which was there. And these were women associations who were doing oyster farming. And this cooperative, which brought about 500 female harvesters who were trained from 15 villages in the Greater Banjul area in the Gambia. And they were grouped together into cooperatives, as I said, and they were trained on the techniques of harvesting as well as seeding. And they also received training as to how the business enterprise can be managed in terms of if it's a small scale, because they needed to handle and how the financial management could be done, because the same women had to be trained for also processing and marketing their products. Because this being a seasonal activity, which continues maximum for 7 to 8 months, they would still have their lean season periods that are involved. So what would they do for the remaining time? So there was certainly a challenge, and these cooperatives ensured that, these women are well supported even in the lean times by ensuring that processing activities could happen. So the cooperatives, as you see, they have ensured that there is access to proper equipments and technologies, high standards for working and sanitary conditions are set up, mobilizing the local population to reforest the local mangroves and also educate on benefits of environmentally responsible resource management, which is there because eventually they are the coastal communities and they have to depend on the coastal resources by itself for a lifetime. So they needed to be trained on those aspects also. Can we move to the next slide? Yeah. So as you can see, there was a microfinance program that was set up where each woman had to be a member, or she had to buy in or take a share of about $10 US. And then once she has become a member, she could avail a loan of maximum, the first loan that she could avail was of $30, which was the investment either for her current enterprise or a new enterprise that she would like to engage in. And then certainly, as I was talking about, the financial management skills and services were also supported by these associations. And further, what was done, which is also done in a couple of NGOs or, good organizations, which are women-based organizations, which I've also seen with Seva Bank in India also, because these are women with absolutely small savings and small holdings. They would not even travel to a bank, but they needed to kind of hold on to their savings, which is there. So this microcredit loans were complemented by a savings program in which each woman was provided a secure safety box where she could store the money for her own family purposes. And also this way they could generate much larger savings, and maybe whenever she wants a second round of loan also, so she can she need not become a member again, but she can add on to the enterprise as and when required. Yeah. So over here, what we found in terms of, no, just the previous slide, please. Yeah, in terms of the sustainability of this microfinance program, because of the seasonal nature and the majority of tribe members who are sole providers for the household, that means that extremely lean periods and intractable cycle of indebtedness is there. And certainly this meant that the loans would be taken to meet the ends between the harvest. So the challenges and issues addressed by the women members for the continued revenue streams through the off seasons were improved harvesting methods, extension of close seasons to attain average size oysters for high market prices, extending the shelf life of oysters by either freezing them, bottling them, or the smoking techniques which are there for preserving the oysters for increasing the shelf value. And so certainly developing lucrative market supply chains to provide high-end and value-added products for sale to the retail and restaurant chains also. As I said, the funding for this the seed funding came from the USAID and Banafa project, and which contributed to the operational cost initially for this. And then with a lot of hand holding through this Tri Women's Association, it was further evolved. And I think as of now also it is currently exploring to see how more funding can be brought from different sources to run their microfinance program. The impact which you see for this microfinance program has certainly been that the knowledge for the women in terms of how to run their small businesses and the saving habits in terms of financial literacy program that was implemented has certainly improved through this. And of course, it has given the women access to formal credits and savings, which was not a norm with them. And the financial linkages to the banks and other financial institutions with a range of all the services now, right from insurance to, because it's a part of the remittance also, so they can also do money transfers. So overall, this is one of the success stories in terms of how there's a group with group empowerment, how they can, there's also social capital accumulation to them, which runs successfully. That was the impact of this program. Another case study that I want to discuss about is, I'll just quickly go through this. This is about a case study of Vietnam. It talks about the aquaculture development in the northern uplands of Vietnam. So this has been almost a decade-old project which is going on, and I would say this is one of the most successful models of microcredit programs in the Asian context, where there was a lot of hand-holding initially, and perhaps countries can adopt this kind of a model and they can also design for suitable delivery mechanisms. So basically, this project aimed to reduce poverty and enhance local food security among the poor and the ethnic communities through the microfinance support to small-scale aquaculture development in the upland areas. So the first step that was taken was to strengthen the local capacity of the poor who are there and organize them in about 50 pilot communes or groups, as they call it. And this project was done in about 3 provinces in the upland regions. And the provinces, I think, were sorry, but I don't know the Vietnamese language that well, but sorry for my wrong pronunciation. It's Hao Binh, Son La, and La Chua provinces of in Vietnam. The project approach to this was to enhance productivity of particularly small-scale aquaculture enterprises. And this was done through the introduction of appropriate aquaculture technologies and establishment of a effective extension service, which was provided, and the way in which the commune had managed the credit and the saving schemes which were implemented by the government, and how the extension services ensured that these schemes were properly implemented amongst these small-scale aquaculture enterprises. The key element over here of this and the success rate, a success factor, I would say also that is attributed is assigning the women who are given the lead role to manage the household aquaculture units. So that was, I think, one of the one amongst the important criteria, I would say. And then also the unions which were there at the district levels or the province levels also supported the communes at the village level. So I think that also with that kind of hand-holding at all the levels, which is what exactly what we are promoting, that if you start from local, regional, national to, the country level. So this kind of with support, a successful microcredit program could be achieved. And each of the group has about 20 members at least at the commune level. So as you can see from the data over here, based on it's small size loans, but certainly if you see the kind of percentage of poor that were covered is almost 70% of poor people that were covered under this program, except in Hao Binh where we have 58% of poor people covered. And the borrower base also, as you can, has a good over here. Yeah. So can we move to the next slide, please? Okay. Then another success story that we have is our own in India, which is there, which a lot of y'all may be aware of. It's a cooperative model, and it is very much operating in Kerala, the South Indian Federation of Fishermen Societies, which is there. So over here, if you see, next slide, please. Yeah. So the model that they have, if you see, is the fishers or the women are organized together in, they're all a member of self-help groups, and they've created the primary societies, which is there, where the fishers have the right to the first sale of fish when it happens as a beach auction, and the sale for wholesalers and agents and export houses. So it's a common beach auction, but over here the fishers have the first right for their fish sale, and it's not the loan sharks who demand their share or are able to sell. So this is the kind of empowerment which is in operation because of the strength of the group dynamics and the group methodology. And as you can see, these primary societies, they are further federated at the district level. And this federation is further managed by the CIFS society at the higher grade level, from where the microfinance or the microcredit program is operated. Also, the federation supports them in the capacity building program at each of the district levels where their federations are operating. And the CIF society ensures that the marketing of fish products also when they are licensing with export houses, particularly for some of the high value products in the fisheries sector, which is there. And they're also providing insurance services to all their members. So this kind of a model, three-tier model structure, which is there, works very effectively in this microfinance program. What CIFS has done, the USP of CIFS has been that when there was a need for the microfinance, requirement, there was a major gap in credit availability that had emerged and this was because of a combination of several factors. Because at some point, the banking sector had become less accessible, and the situation has not changed much today also, I suppose. So access to financial services by the SSF is still a challenge, and especially when political environment or announces a loan write-offs. So thereafter, a lot of financial institutions do not want to provide any kind of credit services to the SSF. So availing the credit was a challenge at that point. Also, there was a transformation that had happened in the fisheries sector overall, because artisanal fishers had moved from using the traditional wooden boats to using better quality crafts and gears. Also, they had started using advanced boat engines at that point of time. So automatically the loan requirements also exceeded a little bit more, and this pushed for a little bit higher amount of credit. And but the in terms of collateral, the situation still remains the same for the SSF sector. So they needed a collateral-free loan. So based on this requirement at that point of time, SIFs ensured. Can we move to the next slide? SIFs came up with a multifaceted and holistic intervention, basically, based on the gaps that had occurred at that point of time. So what SIFs did was they came up with a customized product to suit the needs of the small-scale fishers and the fisher, as well as for the consumption loans also, because as I was talking about, it's catering to the life cycle needs. Microfinance has the capability to cater to the life cycle needs of an individual. So that involves both consumption loans as well as productive loans. At the same time, they ensured through this microfinance program that regular financing institutions would give a loan amount and they would have a fixed tenure of repayment. Whereas SIFs modified its microfinance program, it gave a bigger loan amount and a longer repayment duration also. For example, if it's like 36 installments, they said could be repaid over a period of 42 months tenure. So that's the kind of flexibility SIFs developed in its microfinance program, which is unique, and I think it works very well for the target segment that they were catering to. Also, they tried to keep the interest rates lower in terms, because depending on the seasonal, and also seasonal loans could be repaid at that point of time, and there's no pressure to repay it on a fortnightly or a monthly basis also. So as I was talking about, they had the flexibility of a bullet payment at the end of the season too. Another unique feature that SIF's microfinance program had was a fixed installment repayment does not really hold ground for the fisheries credit sector. So there was a unique formula that was applied for the repayment, and that was about from every fish catch that is caught by the fishers, 10% of the value is goes for the repayment of the credit. So systematically, with the ongoing the pressure for the repayments on the fishers automatically had reduced. So this way they could also sustain their program, I would say, and it also worked well with the end user also. Also, SIF's microfinance, next slide, please. SIF's microfinance program, as I was talking about, has this multifaceted. So they also gave a broader choice of loan products, which is the need for the small scale fisheries sector, because normal financial service providers do not really customize their products for the sector. They just ensure that, one size fits all, and it doesn't really work for the sector. So we've been advocating and discussing this with a lot of financial institutions, and that's our endeavor. Also, if you see the way the owners of the motorized, non-motorized small-scale fishing boats are, so they develop different loan products for this kind of segment. They also ensure that the crew members who are not the owners, but just the crew members on the smaller small-scale fishing vessels, they can also avail labor loans, as they call it. And these loans, these crew members can avail it not just for their consumption needs. When you say consumption needs, it involves certainly their children's education, or it could be an emergency medical expense. It could also be funeral expense or any other household related expenses. So it was involving, as SSF is a very group dynamic activity. So it included everybody in whoever was involved, not just the owner, but also the the crew members. The other thing which is unique about the SIFS program was fisherwomen were not excluded. So they had working capital loans that were provided, particularly for the women vendors, because for them it's almost a daily requirement of credit. And of course, any other petty traders who were directly or indirectly involved in the fisheries related activities, they were also catered to. Also, there was seasonal loan that was availed by fisherwomen for for other activities. So SIFS was also open to that kind of loan products that were developed. Next slide. Okay, so now I'll quickly move from the microfinance financial services aspect to the insurance aspect. So over here, next slide. So the major key players, if you see, next slide. The major key players in the insurance sector, as you all can see, are certainly private and public sector insurance players. The insurance brokers, underwriters who also play an important part and in the sector. The risk assessors, loss adjusters, which are there. Reinsurance companies also have now taken a significant role, and we are trying to promote to ensure that how reinsurers also contribute and come up with good design and develop products for the sector. Then we also have agents, which are there, the NGOs who can help in marketing the products or servicing the clients. Also, fisher cooperatives and associations who have a lion's share in this kind of ensuring that the services go up to the end clients. Here, I would like to talk about quickly about different insurance models which are there. One is certainly the traditional insurance model, which is existing everywhere, where the insurance companies or the brokers provide a range of insurance coverage. Then we have the partner agent model, which is certainly the need of the hour, we would say. And the more the insurance players come into the picture, as well as if more well-functioning cooperative fisheries associations are evolved, perhaps this model can be very effective in kind of providing the insurance services to the sector. The other one, that is the mutual, previous slide, the mutual insurance, which is there, where a mutual insurance company is owned by the policy holders, and over here the policy holders are the fishers, and its main purpose certainly is to provide insurance coverage for its members. Also, in terms of coverage of its members and the related activities aimed at reducing or mitigating the risks, such as providing assistance in case of emergencies, accidents. Mutual insurance companies can also provide deposit and limited credit facilities which are available. Okay, so over here, there's a community and cooperative based model, where, as you can see, a community-based organization operates an insurance fund on a non-profit basis, and fishers pay insurance premiums and receive benefits. Here, I would like to just touch upon one of the examples from particularly one of the fisheries. It's a shrimp fisheries cooperative, which was there, and it got into an arrangement with Axon Agriculture Insurance Company, which is based, I think, in Shanghai. So what happened? What did this model? How did it was? A cooperative which got into an arrangement with a private insurance company. So the insurance company did a contract only with the cooperative organization. It did not do the contract with the members of its cooperatives. So this way, the arrangement was the insurance company will provide all the professional insurance services to the cooperative, and the cooperative took the onus based on the agreement that all the best practices, technological support, and also the due diligence part or the monitoring part, the cooperative takes upon itself to provide to all its members. Now, in such kind of arrangement, the benefits that turned out was each one, I think it was a win-win partnership for each of them, because the insurer was guaranteed that the monitoring as well as the assessment part responsibility is taken by the cooperative. Now, further, the insurance company also came up with a plan, and it was an incentive plan that they said that we would like to incentivize based on good performance, and if there is less loss ratio, which is there, then they had kept a minimum limit of, say, they said the loss ratio should not exceed, should just be 60 or below that. So what the cooperative did was, it ensured that it kept its loss ratio low, and and at some point they brought the loss ratio down to almost 53%. So this incentive worked very well, and the insurance company had to provide the cooperative about the remaining 7% of the total premium that the cooperative had paid on behalf of the members. So that was the incentive that was provided by the insurance company to the cooperative, and the cooperative further distributed it amongst its members. And I think the members further went on to buy more input supplies as and when required for their shrimp farming activities. So such kind of models have worked very well in certain places, and I think this could be one of the ways ahead. Of course, every model is different and it has its own benefits. But in terms of SSF sector, and since it's a well-functioning, it does have the potential to have good cooperatives to build capacities amongst its members and also pass on the best practices. So this was one of the success stories that I would like to share. The last one is the parametric insurance, which is there, which is nothing but a weather-based index insurance, which is being tried a lot in the agriculture sector, I would say. And in the fisheries sector, the only country that has been trying, has implemented as pilot is, I think, China has done that, where they are doing it for the seaweed culture, and also they're looking at the wind velocities, the air temperature, the water temperatures. So based on that weather indexes, they are ensuring that whatever damages happen, if it's so based on that, the companies would be paying out for the losses that are there. I wouldn't say it's been of a great success, but yes, there are pilots happening, and Philippines is one of the countries which is close to kind of implementing such pilots in their regions, particularly in the aquaculture sector. Just to kind of touch upon, as you can see, parametric insurance also involves governments, getting involved. And that's where a lot of governments, a lot of advocacy work needs to be done, or we need to kind of show them a lot of value in terms of, getting engaged and involved in these kinds of insurance programs, which is there. Next slide, please. Okay. So in terms of what Blue Finance is and how it can, help the blue economy at the blue growth sector. This is what I wanted to sum up with. And now I'll just talk about the kind of work that I'm currently engaged in and how we are trying to leverage this blue finance, the blue growth economy, is by promoting and trying to see that how the credit, microfinance, and insurance services can be reached out to the end users, and it's done by strengthening and capacity building of both the implementers as well as the end users who are there. So our CAFE SSF network is a knowledge sharing platform for capacity building to increase access of small scale fisheries to financial services. Next slide, please. So the origin and the genesis of this network happened way back in 2019, or even much earlier than that, but it was basically approved. This concept was approved in 2019, where FAO had conducted a workshop to kind of discuss the guidelines on microfinance, credit, and insurance services, where a group of experts had congregated together, and they had given their opinions on this guidelines that would be implemented and brought forth for the small scale fisheries sector, particularly in Asia, but it certainly holds relevance in other regions too that can be implemented. So what was done was that eventually, with all the stakeholder discussions that happened, we found that all these, and these were all policymakers, government bodies, financial institutions, insurers, multilateral agencies, and some successful insurers who have implemented good programs in their countries. So they felt that there was a need for training and capacity building program to bring this to increase access of small scale fisheries to the sector. So as you can see, the aim of this network is basically to facilitate and facilitate the availability and access to finance and insurance by strengthening the capacity of policymakers, service providers, and fisherfolk organizations. Next slide, please. So over here, as you can see, this was the aim of this workshop, where it was decided to set up this network. Now, between 2019 till now, what the network till last year, there was a draft concept note that was designed as to how we could set up this network with and this initiative is supported. This is certainly an FAO initiative, and it is supported by them. And now Africa, which is Asia Pacific Rural Credit Organization, as well as Africa, which is the African Rural Credit Agriculture Association, they have also teamed up in this initiative to ensure that their member-based financial institutions, both insurers as well as financial institutions, are also engaged and involved in ensuring that how these kinds of services can be passed on to their countries and also to the fisherfolk organizations that can benefit. So between last year, a network concept note was developed, and we had organized a lot of stakeholder discussions, and about 80 stakeholders had got engaged across all the regions, right from Asia Pacific, Latin America, and Caribbean to the Africa region. And Africa region not just involves the English-speaking countries, but also the Francophone countries which are there. So they all also felt that, yes, fisheries and small-scale fisheries is certainly important for them, and they would want to understand and build the capacities, training and capacity building of not just their staffs, but also their institutions. Next slide, please. So as you can see over here, so there has been a lot of documentation work also that has started last year. Also, FAO is currently doing a pilot project in Philippines, along with the Agriculture Credit Policy Council, which is a regulatory body in Philippines, and the Africa, who are involved. And they are ensuring that all the financial institutions and fisher folks and insurers are, a survey is currently being carried out right now. And I think by end of next month, they are starting the training and capacity building programs also based on the survey outputs that would be there. A similar project on value chain financing is also happening in Africa, which is supported by FAO. And the CAFE network is also involved in ensuring that all the stakeholders are brought on board. This program would also ensure that we'll try to identify various case studies which could be involved, which could be documented through this program. Also, just to give you an idea about what this network is and how it is also contributing to the FAOs and the other, how it's aligned to the other programs which are there. So the contribution to the international principles and guidelines, how the network's activities are also aligned. So as you can see, next slide, please. FAO's Code of Conduct for Responsible Fisheries, which is there. So network activities will also be aligned to that. Then a lot of you all may be aware of the SSF guidelines, or they call it the voluntary guidelines for securing sustainable small-scale fisheries in the context of food security and poverty eradication. Taking into consideration the COVID times, we all have realized how much food security is important and the role that fisheries and the small-scale sector fisheries plays in providing the food security, not just to its people, but also to the nations. Also, the network activities are aligned to the guidelines for increasing access of small-scale fisheries to credit, microfinance, and insurance, which is directly aligned, but it also involves a bigger picture over there. And then lastly, the principles for investment in sustainable wild-caught fisheries, the principles of sustainable finance, principles for responsible investment in agriculture and food. As you can see, the specific objectives and purpose of the network is to suggest priority areas for the regional working groups. So this is what the network concept note had proposed last year by discussing with the various stakeholders that what possibly are the priority areas that one can focus on, because it can vary from region to region. If Africa, for example, between the difference I can say between Asia and Africa when we discuss with stakeholders. So Asia said maybe, microfinance, credit, and insurance is certainly a priority, but Africa said that along with this, we also would like to have a social protection program, which could be there. Latin America had different perspectives. So the network is open and flexible based on a regional context as to what could be the priority areas of focus for each of the regions. And then, of course, the other objective of this network is to encourage partnerships with various institutions and organizations to support the network activities, because eventually the network is for the various organizations and to fill up the information gaps or to ensure that what is the technical support that would be required for various institutions. Although it's a knowledge sharing platform and experience sharing, and a lot of documentation also would be promoted, but eventually it's the requirement of the partners and the organizations as to what they would like to kind of leverage from these networks. At the same time, what they would like to voluntarily contribute to the network's knowledge sharing platform. Can we move to the next slide? So the broad scope of work of the network, as you can see over here, is certainly to increase the global attention and awareness on the small-scale fisheries sector. Then it's also to support the development and dissemination of training materials, because training and capacity building is going to be the core focus. In terms of advisory and support services to concerned stakeholders, here it is important because when we are talking about advisory and advocacy also, a lot of stakeholders mention that, yes, they do acknowledge that there is small-scale fisheries, but it does not really reflect in the policy documents or, in the departments. The department might say, okay, it's a animal husbandry, livestock, and fisheries department, but the focus in terms of policy never comes on the fisheries sector. So the network would also ensure that there's advisory and advocacy happening. And if required, even if it's negotiations with governments or policymakers or decision makers, the network will be happy to kind of contribute to that. Of course, with the help of the network members who would be experts and institutions who would be involved with the network activities. And as I said, the promoting partnerships and joint initiatives and fostering the resource mobilization. So at this point, resource mobilization is not the agenda, because we are completely supported by the FAO, and Africa is also kind of supporting us in these initiatives. So through the scope of network, as I said, what we plan to do is to make the decision makers and all the organized members or people understand the unique business characteristics, especially for the financial service providers who do not understand the sector well, and the value chains they operate in and the risks that they face. So that's one. Adapt the institutions to address the sectoral challenges which are there, learn from the experiences, and of course, support the other network members as to how they can implement the financial services programs for the SSF sector. Next slide, please. Okay, so basically the network concept node that we had created was for the structure and the governance. And I would say it's still a draft concept. The concept note has evolved from that from last year, and right now it's at the draft. We've prepared the draft for the structure and governance, but we are open to kind of changing it or open to suggestions also. And that's one of the reasons why we are also running this survey for amongst members and potential members as to how we can shape this network further. Next slide, please. So just to give you a timeline about the progress that we have done through this network so far, as I was talking about, we have conducted stakeholder meetings all through last year. And in the next slide, please. In the current situation, starting in February, we have started this online survey, which I'll be happy to share with any of the participants today. Feel free, and any of the organizations who would be interested in taking up the survey, as we would value your opinions and your as to how we can evolve this network. Also, we are looking at member, especially experts from the member organizations. At this point, we are not, the membership is, we're not saying individuals can become members, but we are open to organizations which would like to be a member. And it's completely voluntary to join this network. And feel free to kind of contribute to the working groups. So we also have categorized the different working groups which are there based on the broad themes. So feel free to join that. Just to give you organization, just to give you an idea about how the structure of the current network is in terms of organization structure. So we have at the global level a steering committee that we are in the process of forming, and the steering committee would involve people from across regions. It's not just from one region. So we would have a broad and a very diverse steering committee that would be effective. And then we have the network secretariat, which is headquartered at the FAO Rome office. And I'm operating here from New York as a network coordinator to facilitate the activities. Then at the regional level, as you can see, we have the Asia Pacific working groups, the Africa, as well as the Latin America. And we are getting responses from various organizations as to in which region and under which theme they would want to kind of contribute and be a member of this working group. And of course, there will Africa and Africa. For Asia, we have our Africa organization, which is our nodal regional focal point. So whatever activities that we do, we try to facilitate it through them. And for Africa, we have Africa, which is the organization. So can we move to the next slide? So just to give you an idea as to how we're trying to do, we're going to have working groups based on, because we are just evolving, so we don't want to have a broad array of topics. So we would like to stick to about 2 to 3 topics amongst the working groups. And then as the network evolves, we can touch upon more topics. So that's the basic idea. The broad thing, as I said, is more priorities on capacity building, advocacy, advisory, as well as promoting partnerships. How we want to go about it is ensuring that all the 5 Ps of the project cycle are covered. Can we move to the next slide? So as you can see over here, it says the network's activities involves situation analysis, design, development, preparation, implementation, and then evaluation. So we want to cover, so right now we are at the situation analysis phase where we are trying to identify the gaps of the various organizations which are sending in their responses to the online survey. And there's a team which is already currently developing a capacity building program, but it is more for the Philippines as well as the Africa regions through the project that we're doing. We're also doing, the next things also stakeholder analysis is going to happen, and the cash flow analysis, which would be there. The part on the checklists and all that is already being developed, which is a standard process, which can be customized based on the requirements. And then certainly the other aspects, as I said, advocacy and awareness, it depends on how the requirements would come from member organizations or governments or policymakers to facilitate this kind of activity. And the mechanism that we want to do this is by coordinating is more through the LinkedIn platforms that we have created. So feel free to send us, connect with us through the CAFE SSF network platform. We also have our survey uploaded over there for those of y'all who are interested, those organizations which are interested in taking up the survey. Or I'll also be happy if you can write to me, and I could also share the links of the survey to be taken up. So the broad, in terms of coordination mechanisms that you can see for the network, we are collaborating through LinkedIn. Dissemination material, we don't have a website as of now, but we plan to do that as we evolve, because we want to kind of create a good work and we want to show up the work and then kind of talk about it. So at this point, a lot of dissemination is happening through Africa websites, the Asia Pacific region. They have uploaded a couple of our documents, which we started doing from last year. And also FAO website also would be keeping the dissemination material that will be developed. Then we also have the Rural Financial Investment Learning Center of FAO. That would also be disseminating our material. They also have a newsletter that comes up and that talks about the different activities. In terms of collaboration, the new norm being that most of the meetings are virtual as of now till things normalize. And then the steering committee meetings also, as once the steering committee gets formed, we would either do 6 monthly meetings with them. And the working groups also would be brought together in terms of, having any discussions with them. As I said, the current activity of the network is taking up this survey, and feel free to give your feedback, opinions, and also let us understand your networks, your institutions kind of requirements. So if there's something that we can do about within the regional working groups, feel free to take this survey and contribute to this network. I also want to, next slide. I also want to share with you all the different publications that would be of interest. And these are absolutely recent publications which we have documented in the last 2 years. So especially the Blue Finance guidance notes. Today we discussed just 3 out of the 6 which are there. So we have 3 more, which is Blue Bonds, Blended Finance, and Impact Investment also. So feel free to read those Blue Finance guidance note series that we have. Also, other literature that we have developed on the role of finance in mitigating COVID-19 impacts. And the most important I would recommend is the guidelines for increasing access for small-scale fisheries, both insurance as well as microfinance services, which is one of the bases for evolving this network eventually. So yeah, feel free to write to me, or you can connect with us on our LinkedIn website. Thank you.
Thank you. Thank you, Suchitra. It was wonderful to know, all your activities, and also, especially to talk about your cafe SSF. And I'm sure many of us will be interested to join in this venture with you. And I request participants, if any questions or anything you want to clarify from our speaker, I'll stop sharing now slides.
Yes.
Good evening, madam.
Yes.
Hello.
Yes,
Yeah,
good
go
evening.
ahead.
Sir, that in small fisheries, that majority of the inland states, madam. Inland state means landlocked states are there, madam, in India.
Yes.
So they are promoting with some Kisan credit cards like that, madam. They are providing credits, Kisan credits. Recently, it is extended to fisheries also, but they are not supposed to.
It's not clear. Can you come again?
I think he lost the connectivity.
Oh. Yeah, could you
Mr.
get
Bhaskar, you
what
are
he
there?
wanted to ask? Suchitra, could you get what he wanted to know?
Yes, yes. So I think from what I could hear, he's talking about the Kisan credit card, and he's saying that recently, because the regulator also in previously, I think the Kisan credit card, it was only accessible for the scheme could be accessed only by the agriculture sector, and recently, I suppose fisheries also has got included in that, and I think there's a as far I'm not that updated, but I think there's a only particular number of fishers were supposed to be included in that program for that particular year, I suppose. So I think that's his question, and he's talking about the inland. When it comes to fisheries, it's not just marine or the coastal, but it's also about the inland fisheries sector. So I think that's what he's trying to say. From what I understand, certainly it's a very relevant issue, and this is exactly what. In terms of advocacy or trying to communicate to the policymakers that when they're looking at Kisan credit card or such kind of schemes, it has to be kind of brought to a broader, all the natural resources activities which are included in that, rather than bring, as I was talking about, that fishery segment is always, kind of taken into consideration a little later. So this has to be extended uniformly to the sector. So the network certainly would be looking into these kinds of things, as to how it can be promoted and how these schemes can be brought forth. When we can talk to different policymakers or decision makers on these aspects. And it's not the network, but it's the working groups which are eventually going to take this in their own regions when stakeholders come up with such kind of issues.
Okay. Anybody else?
So can I interact here?
Yeah, yes, sir.
I got a lot of good points to learn about the microfinance and plus insurance, how they are coupled together. And I could understand that this is not a question, but whatever is coming in my mind. There are two lines clearly coming out. One is insurance, another is assurance. So assurance of income and insurance of income. So these two lines, because when we are addressing small scale fisheries, so already you have realized, and all of us realize, that every day they require some income, and that has to be channelized in such a way that they are insured as well as they are assured. Now, in this process, I understand that what Bangladesh has done, they have remarkably done something additional work, probably which we are not able to understand so far, that they have pushed the technology and innovation at the grassroots level, developed an innovative mechanism, which we may call capacity building, but a very massive mechanism. So that massive mechanism, we have to learn how to develop a framework which through which we can assure the increase in income. And then because of the climate and other factors, weather factors and climatic factor, the risk factors are how to address these risk factors through insurance. So if these two are clubbed together, we can address the issues of small scale fisheries. Now, technology transfer at the grassroots level becomes, it has to be further improved to develop a business model. So what kind of this Professor Yunus has done all this, how to convert a technology into a business model, which will incorporate all the dimensions of business for a poorest of the poor farmer or fisherman. So those issues are very important. And then coming to another issue, which I feel very important, that the use of artificial intelligence is coming a very big way. So far the insurance companies are concerned, most of the insurance companies, because the income fluctuates. So if we have to stabilize the income, so immediately the income, one day it will be less, another day it will be more. When it is more, so if we can read, when it is more, the money has to be deducted. And when it is less, money has to be given. So that way we can stabilize the price and income of especially the poor people. So role of artificial intelligence may be incorporated in this, because other insurance sectors, they are doing so. And then very nicely, you have summarized the extension or capacity building. Now, extension has also become a transfer of organizational skill. Earlier, it was transfer of technical skill. Now it is transforming into organizational skill, or we can say it is techno-organizational transformation, especially when we are addressing the poor people. So it is developing an organization, farmers, producer organization. And then we also should incorporate the technology transfer mechanisms which are being developed in India, like through Sagar Mitra, Matsya Mitra. So these mechanisms, because a huge country, lot of population, we have to have a very large extension mechanism under the leadership of definitely Department of Fisheries and KVK. So that mechanism, we have to see the transfer of technology, transfer of organizational skills and business models, innovative business models through which the poor people can come out with some a lot of technologies are there, how to convert them into a business model, that has to be seen so that we can assure the income before we insure the income. So this is what I could understand from your very brilliant lecture. Outstanding and brilliant lecture.
Thank you, sir. Thank you very much. And you just nailed what our thoughts are and what we want to kind of evolve and promote eventually through the working groups. So this is exactly what we want in terms of the thoughts, ideas, and how experts from the organizations can contribute to the regional working groups. And this can be kind of shared, and we'll be happy to share these kinds of thoughts with the other stakeholders from other regions too, because as I've been saying, and then I started also working with the network, and even before that, when I started developing the guidance notes and all, eventually, most of the time, I would, look towards India, because we certainly have a lot of success stories out there, but it's all in fragmented this over there. So I was being told that you're getting a lot of India stories, you need to focus on others too. But the kind of models that we have it's much more advanced. And I felt that we need to talk about this, and our organizations need to talk about it and highlight it on a bigger platform. So I think with this kind of a network platform, we suppose we are going on the right track. And you just, as you said about these Bangladesh technology transfers and how they have kind of excelled in technology, as well as the Sagar Mitra and the AI models also. So thank you so much for sharing that.
And then we want to join your network.
Certainly, sir, certainly.
Thank you,
So
sir.
can
You all are
I come
welcome.
in? Can I come in for 1 minute, sir?
Definitely.
Yeah.
Rupam.
Yeah, yes, sir.
Suchitra, first of all, I'm not very good in finance and all, but being a farmer and today, whatever, like a student, I have listening to you for almost 2 hours. First of all, I really appreciate the kind of effort, the kind of time, and the data you have compiled together. It's a very good draft and a very superb presentation. And I congratulate you because it looks very easy for everybody for 2 hours to listen to your talk, but it might have taken your hours and hours of dedication and study to put and compile that thing. So that kudos to your effort. I'm very proud of you being a CIFian. That's one thing. And I have my own opinion about this. Oja sir also brought out the topic of Bangladesh. See, what I personally feel is that I've been to Bangladesh many times. So they invite me as a speaker and experts to come and give them knowledge and success about banana farming or tiger farming. See, everything is need based. If you see Bangladesh, you cannot compare India and Bangladesh. See, Bangladesh per capita fish consumption is almost 10 times higher than us. So what happens when there is a need, when there is the entire world commercial moves on only one single law is demand and supply. When there is a demand, there is a drive, something which drives the fish production, means that's where the technology, the support, everything has come to that country. Today, I'm very fortunate that this year, Pradhan Mantri Matsya Sampada Yojana, government attention, so much attention is coming to fisheries. But we should also understand these 2000 up to 2018 and 19, before all these lucrative schemes, India, with all the efforts of the private entrepreneurs, has already reached to the top position of shrimp production in the country.
Correct.
So today, because we reached to the top position of the country with 40,000 crore rupees turnover and 5% of our national agriculture GDP, so that's where luckily we got into the eyes of the government that this is a very fantastic business and even providing employment to 1.5 crore, almost 2% of the Indian population. So yes, late but not still we got into the eyes of that. So I think what really India needs is the push, the drive. If domestic market and the fish consumption India we will able to manage and increase that, I think rest other things will fall automatically. See, the end game is that farmers should earn money. See, I'll tell you because I'm my 30 years are dedicated to shrimp farming. So I will take an example because I'm not an authority to talk on other subject. But when it comes to your subject and the development, see, when in India you should divide in the two era, monodon era and Vanami era. During monodon, on an average, India has never produced more than 70,000 tons. So their entire production in the monodon era revolved around 70,000 tons. But suddenly Venami came, and so say I also presented a paper called Venami Tsunami. So Venami came into India, and you can see leaps and bounds. Every year we have added 1 lakh tons of extra production. And today we have reached almost close to 1 million metric ton and with a turnover of 40,000 crore rupees. So what drives is the profitability of the industry. That's where it gets attractive. So when it comes to shrimp farming and microfinance, I'm very sorry to say, in shrimp farming, your microfinance will not work. But definitely it has a huge potential, as Mr. Bhaskar was trying to ask you something about the landlocked inland states and all. So I think definitely it is work. But what I want to bring a very valuable point, see, as per the latest data, India has already touched 15 million metric tons of inland fish production. But the irony is that, Suchitra, when all the resources are only restricted to fishermen and fishermen communities, there are, I think, more than 1,000, I think maybe close to, if I'm not wrong, I don't know exact data, but it should not be less than 30,000 fishermen cooperatives registered working in India. But if you see their financial data, they are all in loss from since they are registered. So where already their financial outlay is into minus, nobody is showing any profitability. So my question is that then who is producing 14 million metric tons of fish and happily selling in the country? So are these data are realistic? Where the government is getting this data that India inland freshwater aquaculture is 14 million metric ton. If in every year 150 लाख टन मच्छी पकती भी है, बिक जाती भी है, लोग खाते भी हैं, तो फिर पैसा क्यों जनरेट नहीं होता? ये सबसे बड़ा क्वेश्चन है. Then government has to understand this thing कि भाई these either our data, whatever census we are doing is actually correct. If 14 million metric ton fish is been every year is produced in country and consumed, and still there is no profit. So who is producing this thing? If finances are not available to the poorest poor, then who is financing them to do that? So all these modules has to be studied very properly. And I will request you personally, Suchitra, since you are working with the FAO and all, I think your communication and your contact with the government, try to give all this your good work to the Secretary Fisheries, write to the Ministry of Fisheries, and try to conduct such programs. I think this program, Rupam, I request you, the link you should, recorded link you should share to maximum government people. This is what is the need of the hour. I once again congratulate Suchitra for putting up a very brilliant paper, very exhaustive paper. And I think such good work is required. Thank you so much. And it was a very learning for me. I think even 10% of your good work is reach to the grassroots level. I think it will really transform the fishery sector in our country. This is the need of the hour. Thank you. I congratulate you. Thank you.
Thank you, Paroj. Thank you for the appreciation. To just answer back, it's not answering, but just kind of suggesting, as you just said that I need to communicate, or since I'm working with the organization, the whole idea of talking is we would request, and the network would request that organizations like you all that you represent should join the network and be a part of the regional working groups, so that a collective working group voicing it out is far more effective in bringing the changes for the policymakers and the decision makers. Because we've been talking about this for some time. It's not rocket science. We've been saying that assurance and insurance, it certainly is playing a lot of role. Just giving the context of the Indian markets by itself, if you see, we're currently doing a insurance paper right now. And we have about 10 private insurance players in our country, but not one of them is providing any fisheries related products. So this by itself is a constraint when we're talking about, on one side, when you said there's immense, we are the leaders in production. And what are we doing about ensuring that, or risk mitigation mechanisms that is happening? So I think this is some very relevant. So it would be good that as far as possible, people who are here, you can communicate and please join the network platform. At the same time, as you correctly pointed out in terms of the data, we have been feeling this, that there is a lot of disaggregation in the data that is there. For the simple, when I spoke about the microfinance sectors worldwide, and talking about this fisheries segment or the small scale fisheries, we're just estimating it's a 5 or a 10% who may be availing the services, but we don't even know about it. The lessons or the models that we can learn, as we were finding, is small countries like Philippines. They have come up with, an inclusive financial inclusion program, where they are ensuring that each and every fisher of theirs or fish farmer is registered in the right manner. So that's how they're able to, because these are countries which are cyclone prone, they have typhoons and so much, and their entire food security is dependent on the fisheries sector. So they are taking so much of care in ensuring how the data can be, and the kind of people who are involved part-time, full-time also in the sector. So they have gone to that extent of monetizing and ensuring that how the sector can be built up and what kind of services can be brought up. So today, with such informed decisions, they're able to bring in the right policy into the sector. So this is exactly what we want organizations to come and discuss about and take it forth to our decision makers.
No, definitely. I will definitely pass on your presentation if you share with me. So maybe inland, lot of Ramchandra Raju is the president of the Andhra Pradesh Fish Farmers Association. All these people can definitely do that. But definitely, yes, will be. As I said, shrimp farming is a highly capital oriented business. Even for 1 hectare, we require more than 35 lakh rupees. Even the Kisan credit cards is not working for us. But definitely the marginal and these small farmers can definitely utilize this scheme. But last but not the least, the government has to prioritize this sector and the decisions has to be taken from the top. But luckily, yes, I can say last 2 years, this sector has been in the eyes of the government when it comes to this potential and all. I think good things is going to happen in our country. And I think at least microfinance is definitely, for any business, finance is the backbone for the success. So I think I'm very, very glad to listen to your presentation.
Thank you. Thank you.
Yeah, hi.
Yes.
I'll take your leave because I have to some other works. Okay. Thank you. I was just.
Thank you.
Thank you, Rupam.
Thank you. Thank you,
Thank you so much.
I am Dr. Arpita Sharma. May I say
Yeah,
something?
madam. Yeah.
Yes, ma'am.
Yeah. Thank you, Suchitra, for such a wonderful lecture and all the participants at the discussions which followed. This is not a question per se, but this is a topic which is close to our heart. Microfinance, self-help groups, and women SHGs, men SHGs, all this is very much a part of our social science division, which Dr. Ojha must have already explained till now. So, in fact, if I get your email, Suchitra, the work which CIFE per se has been doing with reference to gender mainstreaming and self-help groups and microfinance, we have compiled since the time CIFE has been formed. So the work which we have done is quite commendable because from I joined here in 1996, but even before that, a lot of work was being done. And we have compiled it in form of a paper, which we can share with you. And if that paper is distributed in the networks, then as an organization, the work which CIFE has been doing will also get popularized. And having said that, for example, FAO's and ICCF, VGSSF, Voluntary Guidelines for Small Scale Fisheries, most of our scientists were involved in that gender mainstreaming, disaster management, and marketing. So many scientists were involved in that policy building exercise also, which was organized by ICCF and FAO was sponsored. So we have been doing this with reference to SHGs, which are all over there in India. Our students have done impact assessment of these SHGs in Tamil Nadu, Kerala, Chhattisgarh, Bihar, and many northeastern states also. So all the students who have been listening, especially from our division, they will quite relate to what you said. And I would like to congratulate you. And also I take this opportunity to give visibility to the work which our organization, CIFE, has been doing in this regard and this topic. So excellent. This is very close to our heart. And you may be knowing about GAF forums, that is Gender Aquaculture Fisheries Forums, which is an international association, and CIFE, CIFT, and many other scientists are a part of that. In fact, we get funding from for this GAF forums, which have been held in Bangkok and many other places. In fact, GAF 8 is being organized, and we are working on those lines, and we are involved in a lot of work with Meryl, Carmen, Nikita. All of us are a team who are building a lot of advocacy as well as work on this aspect. Okay, thank you, Suchitra. Yeah, great to listen to you.
Yeah, thank you, ma'am, and good to know about the work that you all are doing. And it will be nice to kind of also connect with these kinds of networks and see the synergies that we can kind of.
Yeah, thank you.
Yeah, I think Suchitra, we have taken enough of your time. Though I said only 1 hour, it took almost 2 and more than that, 2.5 hours.
Yeah. So sorry, I want to intervene, and I just want to take 1 minute of your time. So this is Oja sir and for CIFE. So I just want to leave this thought with you all based on this kind of, as Manoj was also talking about, that we need to talk about this to a lot of our policymakers and to our government. So somewhere perhaps, as we go ahead with the network activities, at some point we would be happy if CIFE kind of, helps us coordinate and bring these policymakers together, or even the insurers, because private insurers do play the a very important role in this, because we are doing a lot on the financing part, but the insurance part is still not kind of strengthened. So we can kind of see how we can bring these people together and see if we can play a vital and critical role in bringing them together to talk about these things.
Yeah,
This is
Suchitra.
just leaving food for thought.
Yeah, that's a great idea. And in fact, we made some efforts to talk to the banks when this microfinance and these things came into picture, and we talked to private banks. But like, as you said before, the private sector, the corporate sector was a little hesitant. But having said that, now with the CSR coming into picture, corporate social responsibility, they are giving an increased focus on the livelihood generation programs. So we are taking some companies like Bosch, etc., and utilizing their CSR funds. So maybe in CS, you can have this convergence of corporate social responsibility and microfinance. That also can be a good model. If not the microfinance, the products like insurance, savings, loans, etc., we can also use this for livelihood generation, convergence of CSR.
Absolutely.
Nice idea. Yes.
Yeah.
Thank you.
Thanks.
Yeah,
Sorry,
well,
Rupam.
yeah,
Please.
yeah. As you already have felt that there are many, chat box, there were many messages. You're giving thanks to you, Jan. It was excellent talk. And
Thank you.
now I request Dr. Saurabh to propose vote of thanks.
Thank you, sir. Always when finance is talk, it's always a vibrant and many persons have the most of the opinion and then lot of questions. And ma'am, you have done a brilliant presentation for us to inform the A to Z of this microfinance and how this will be like very good techniques, tools, or like a management system for the small scale farmers. So I'm glad to extend formal vote of thanks who are joined this webinar or live lecture on Blue Finance to support small scale fisheries. Firstly, ma'am, our sincere thanks to you for your sharing valuable information to make this topic very informative and lively for all the audience. And this is the first topic I think it is discussed before your delivery. So the interest of this topic is highly appreciated, and we thank you. Most importantly, we pay our sincere gratitude and thanks to our Honorable Director and Vice Chancellor, Dr. Gopal Krishna sir, for constant support, motivation, and providing all the necessary facility to facilitate this webinar. Our sincere thanks and gratitude to Dr. N.P. Shahu sir, component leader of pedagogy, NAHAP ICRCIP, for mentoring and motivating the team for a smooth conduct of this program. I profusely thank to pedagogy team, Dr. Rupam sir, Dr. Sasi, Dr. Sna, Mr. Bumaya, Ms. Nujeva, and Mr. Raj for taking all the pain to plan and execute this webinar in successful manner. We also thank and extend our gratitude to all the participants, particularly all the heads of respective divisions, principal scientists, senior scientists, and I am seeing most of our alumni seniors who are actively participating in this webinar, and students for participating and getting the fruitfully spare their valuable time. At last, I thank to all who directly or indirectly contributed to this live lecture and make it successful. Thank to all, one and all.
Thank you, Saurabh. And thanks once more to Chitra. Special thanks because you woke up at 4 o'clock in the morning and you are sharing your thoughts with us. We look forward to be associated with you all in near future too. And thanks for accepting. I know we have been talking about this lecture for so long, and finally we could materialize that. That's why I'm more happy. Yeah.
I should thank you all for giving me the opportunity, and I feel truly honored to kind of give this talk, and it's giving back to my institution. And I'm indeed very happy to do this.
Yeah,
Yes.
Thank you so much, and
Thank you,
thanks
Dr.
everyone.
Sahu. Thank you,
Thank you,
Dr.
ma'am.
Ocha. Thank you, everyone. Thank you, directors.
Bye, Suchitra. Then have a nice day.
Thanks. Bye.
So kindly share your email and also we can interact in future.
Yes, sir. Yes,
Yeah.
sir. I will. Thank you.
Okay, bye.
Bye.
Okay, bye.
Okay, thank you. Thank you very much.
Thank you,
very
sir.
much.
Thank you, ma'am.
And all the best for your endeavor.
Thank you, sir. Look forward to you all joining it.
Definitely, we'll try our level
Thanks.
best. Yeah, definitely.
Bye. Have a good evening.
Thank you. Thank you.
Bye-bye.
Same to you. All the best. All the best.